Hi folks, I'm Hector Garcia, CPA and Small Business Advisor. In this video, I'm going to answer the question, how much can I deduct from my home office? Or how do I calculate my home office tax deduction? Now, the rules are in the IRS website. I'll put a link in the description to this page that does a really good job summarizing it. And just to clarify, this is within the context of a small business owner or an individual that has business income. In other words, if you are employed, if you were fully employed, you and your spouse, whatever, and you don't have business income, that means your only income comes from your employment income, you cannot deduct a home office deduction. This is only for business owners or people that have business income. Now, your employer, if they reimburse you for the home office expense, yes, they can take a home office deduction for that reimbursement that they're giving you. In other words, that reimbursement could become a tax deductible to them, but they should seek advice with their own CPA in terms of exactly how to put that together. So you individually, if you're an employee, if you have employee income, W-2 income only, this video is not for you. Sorry. But if you have business income, you want to pay attention to how we do this. First of all, let's talk about the general rules. So number one, we mentioned you must have business income. Also, the space that you have allocated to your office in your home to your office must be for exclusive business use. So you cannot have like your kid's school desk and your computer desk on the same place. That would not be exclusive use. It is to be used regularly as the principal place of business. In other words, you wake up in the morning, first thing you do is you go to your home office. That's kind of how you get your office or your day started anyway. And that's really important too, because if you drive to customers' homes or to jobs, or you drive to different locations in which you do work, you want all the miles starting from your home to count, and your home office will need to be established in order for you to get all that mileage deduction. Because otherwise, if you don't start at your home, technically you start the job at the job's site or at the location where you are regularly doing the job. So starting from home gives you additionally that ability to be able to take the mileage or the car expense from driving to the jobs or to where you're going to be performing the work. The vehicle expense is a topic for an entirely different video, but that's one of the really important things. Also, this needs to be an exclusive place where you see customers, see patients, or whatever it is in a regular course of business. In a post-pandemic world, as long as you have a desk, an internet connection, and Zoom or something like that, you don't have to physically meet your customers at your home office. As long as that's the place where you initiate that connection, that is good enough. The other one is it needs to be a separate structure. Okay, that's up to you really. Like if you have a separate structure, that's great, but it needs to be enclosed, so a room works, right? So here it says, separate structure not attached to the home. That actually that's not specifically true. And of course, if you do that, if you have that, you get a lot more deductions. But if you have just a room, we're going to talk about the square footage method. Also, it could be, if you don't have a physical office, it could be a place where you store inventory, store product samples for your business. So in other words, your garage could work, however, only the portion that's allocated and separate to your garage. So if you could prove, with pictures or whatever, that you use the entire garage all year long, you don't have a washer and dryer there, you don't have any personal belongings there, you never park a car there, yeah, you could take the entire garage. But that's not really believable and difficult to prove. So most people will make the case that, hey, half the garage is for business, half the garage is personal. So you would take half of the square footage of that garage. And there's a couple of rules here. You can go through it. Just go through it. Look at the details in there. You can click on publication 587, which is a pretty big document, 30 pages or so, and that one goes in great detail, especially, and that's what we're going to break down here. I'm going to show you a spreadsheet that I use, and I'll give you a link so you can download that spreadsheet. Let me scroll down here because this is everything here. So this here, the worksheet, which is page 21 in that publication 587, this has the formula that you're gonna use to figure out what that number looks like. Don't worry about that. You should download the worksheet. You should look at it, but you're gonna use my spreadsheet. Trust me, you're gonna love this spreadsheet. You're gonna be able to download it for free. I'll put a link in the description. So this spreadsheet has two tabs. One is going to be for renters and the other one for homeowners. Homeowners is a little bit more complicated because we have to deal with the concept of depreciation. So for the time being, let's start with renters and then we'll kind of move in to homeowners. So the first box we want to put in here is your total sales. Your total sales. And that's really important because you're not allowed to take a home office deduction that's above and beyond your total sales. In other words, your home office cannot bring your business into a negative. So we're going to be limited to your total sales of the home office deduction. Makes total sense. You're going to put that number in there. Let's say that in this particular case, my business brought in $80,000 worth of sales. Your total sales, your gross receipts. Then we're going to put the number of months in which the home office was used, because if it's only used half the year, no surprise, you can only take half the deduction per se, right? So we're going to put there 12 months. Let's say I used it the entire year. Then we're going to put the square footage. Let me change the format of this. We're going to put the square footage of the house. Let's say it's 2,000 square feet. And then the square footage of that dedicated office space. Our room is best. Some people try to make the case that we're going to use the dinner table as a home office. That doesn't work because there's just no way to prove that this is dedicated, separate space. You can't separate a dining table from your home office. So it needs to be preferably a room with a door. You can make a case if you have a studio which has no rooms and no doors. But as long as it's just really, really clearly separate, my advice to my clients is take a picture of it. Make sure the picture clearly shows only business stuff and not like underwear or kids' toys lying around, right? That will make it very obvious that that's a physical office space. And look, in a post-pandemic world, the IRS will probably be a little bit more lenient. Again, I'm going on the record with this video. I am not telling the world that the IRS is going to be totally lenient and not follow the rules. They will follow the rules, but they understand that during the pandemic, people had to scramble and without much preparation, shift the entire operations to the home. So there might be a little bit more flexibility and leeway on the year 2020 and 2021. As years go by, they're probably going to go back to the strict rules. Hey, make sure it's a physical, separate space, a room, something that could be clearly identified as business. And again, you can take pictures to keep records of that. Anyway, so we have our total home square footage. Let's say it's 2,000 square feet. 100 square feet is that little room that we have. So that gives me a quick calculation here, 5%. That's the spreadsheet itself is going to work that in. Now, total paid rent to the landlord. So let's say the rent I paid to my landlord is $2,800. I just type $2,800 in there in the monthly box. The Excel spreadsheet will calculate the annualized for the year. So you don't have to calculate anything on the annualized. The spreadsheet does it by itself. You're only going to input the monthly utilities. Let's say that the total amount of electricity, water, gas, all those utilities, let's say it's $175. Just type that in there, press enter. The spreadsheet will do the annualized calculation. Let's say I pay a cleaning company $100 a month to come clean the entire house, which includes the home office. So I'll put $100 in there, press enter, and that will add it to the calculation. Now, these are the indirect expenses that we're discussing now. This is the first group. All these amounts that I put here on the monthly side, they're going to be calculated, annualized, multiplied times the number of months, and then they're going to be multiplied or proportion to that allocation. So that's the square footage versus the entire amount. So you will notice every one of the monthly amounts that we put in here, they get multiplied times 12 or whatever the number of months that it is, and it gives me here the total amount, $39,000. It's the expense, and that will multiply. You'll see on the formula that will multiply times that percent allocation, and that will get you your indirect expenses allocated to the home office. Now, what's indirect versus direct? So indirect are all the ones that you spend for the entire home. Therefore, only a proportion of that goes into the home office. if you look at, for example, shared internet service, if you pay one internet bill that you use both for the personal use and the business use, you pay one phone bill, one TV bill. These are all the shared expenses. Those are all going to be multiplied times that percent allocation. Now, if you pay for any of these things separately from the rest of the office stuff, from the rest of the home, you're going to come down here to direct expenses. These are the things that are directly related to the home office and not related to the rest of the house. So for example, if I got commercial internet service just for my home office, which is separate than my personal use internet service, I would put that in there. If I have a separate telephone system that's not my shared phone system that I use for my home, I would put that in there. If I have a cleaning service exclusive for my home office or my inventory that I have in my garage, whatever it is, I would put that in there. If I spend some money repairing the office, let's say an average of $20 a month, I'll enter that in there. That will multiply it and that would add that in there. The spreadsheet is designed to take all this stuff. Now, these direct expenses, you're not going to include them in your regular profit and loss report on your regular itemized Schedule C or your business tax return, because we're separating those so we can calculate the overall home office expense. You actually don't need to take these direct expenses in the spreadsheet. If you actually omit them completely, you can include those on your regular P&L and make them a regular expense, not a home office expense. But I'm illustrating here just in case you have them all mixed up. So you want to be able to separate what's a home office expense exclusive to the home office and a home expense in which a proportion needs to go to the home office. That's the difference between the indirect in the top that gets proportioned and the direct that gets used 100%. After you enter all the numbers in here, you're going to have this line here that says home office expense regular method. Basically, that's going to take that proportion of the indirect plus the entire direct, add them up together, and then give me how much is my deduction. So in this particular example, my deduction is $2,195. I'm going to save this spreadsheet. So the spreadsheet you're going to be able to download is this exact one with these exact numbers, so you can follow along in the video later on after you download it. Now, there's also a simplified method that basically calculates the square footage times $5. There's actually a method with the IRS that says, look, you don't need to itemize anything. As long as you take the total square footage, multiply times $5, you can take the entire amount as a deduction. There's a couple of limitations and caveats. The limit is 300 square feet. So beyond 300 square feet, you can't use the simplified method, or you have to lock it in at that 300 square feet. And you also have to proportion it by the number of months. So in other words, if I have a 300 square foot office, 500 square foot office, 1,000 square foot office, I'm limited to 300, multiply times 5. That simplified method will limit it at $5 per square foot or $1,500. So for example, I'm going to put here 500 square feet for my home office. Notice that this whole amount gets calculated. Of course, it is taking a much bigger percentage in using the indirect method times the allocation, but the simplified method is limited to that. So that's not the regular plus the simplified, it's either or. So the idea of the spreadsheet is you calculate it and you take the highest. Obviously, you want to take the highest. So that's the renter's version of the spreadsheet. So in the homeowners version, it's going to be a little bit different just because there's some other moving parts. We're going to start with the gross sales of the business. Same thing applies. We're going to put here the number of months. Let's say it was all 12 months. We're going to put here the original value of the home when we bought it. So not the current value. The original value, let's say, is $300,000. Then we're going to put the land value, which is typically 20% of the purchase price, but we're only going to put land value if this is a single family home. So any property in which the property itself and the land are separated in the valuation in your county, for example, we want to separate that because we cannot depreciate the land portion. So typically just multiply the purchase price times the 20% and you'll be good to go. Now, if you live in a condo or in a type of property that wouldn't have separate land value, you put 0 there, right? But if you have a single family home with land value, I'm going to ask you to put 20% of that because the formula itself is going to separate that out. Then you want to put the overall home improvements that would essentially increase the value of the home. So anything that you add to the home or the home's overall value, you're going to put in there, and you're going to do that before you before you converted that space to a home office. Then we're going to put a build out specific to the home office. So anything you paid to actually build out, repair, construct the home office portion of the home, you're going to put that separately because the depreciation gets estimated in different ways. I'm going to just show you that real quick. So for example, right here, estimated depreciation of the home, 39 years. What the formula does is it takes the value of the home minus the land value plus the improvements, and that is multiplied times the square footage proportion divided by 39. That gives you an estimated depreciation. That's your tax software is going to calculate that exact, but this what this worksheet is for is to give you a general idea how much deduction you can take on it. Once you put the numbers in your tax software, it's going to be a lot more precise than that, but this is a pretty darn close estimation. If you look at the build out, that's a simple formula. That's the specific build out expense divided by 15 years. That's the most typical type of depreciation we take against a build out. In this spreadsheet, you also use the square footage dedicated home office space the same exact way. You're going to see that percent allocation that permeates throughout both versions of the spreadsheet. Now, the indirect expenses are going to be, as we mentioned, all the things that you paid that are directly related to the home as a whole, not the home office itself. So, for example, let's say we spend $200 a month between electricity, water, and gas. Let's say we have a cleaning person that we pay $200 a month to clean the entire home. Let's say the mortgage interest per month in average, and if you don't know the average per month, but you do know the annual, just take the annual and divide it by 12 and input it in the monthly average. Let's say that happens to be $400. And let's say the property taxes, let's say they're $6,000 a year, so that will make it $500 a month. Let's say we don't have shared internet, we don't have any other indirect expenses, we don't have shared TV service, and this is going to give me my indirect expenses, which is $15,000. That's going to be multiplied times the 9%. That's one portion of the depreciation. Let's go look at the direct expenses. Again, these are the expenses that you're not going to include in your regular profit and loss, in your Schedule C, in your business tax return. You're not going to include that because you're including it here. And again, if you exclude it here, if you don't include it here, then you can put it in the P&L. So let's say we have a separate internet service just for a home office, and that's $150 a month. Let's say I have a business telephone system just for my home office, and that's, let's say, $125 a month. Let's say I spent an average of $50 a month doing miscellaneous repairs and maintenance to things around the home office and home office only. Let's say I don't have a cleaning person that cleans just the office. That basically gives you a general idea. Now I'm going to delete this separate rent paid out of here because that only really belongs to the renter's portion, and we're just going to leave this here. So you're going to have office repairs, office supplies, business services related to the home office, and this is the number that we're going to use. So now we have this home office expense before depreciation. That's going to be this proportionate amount plus all the direct expenses. That gives me a total of $5,318, and then we're going to have the two estimated depreciation amounts, and this gives you the estimated amount including depreciation. Again, the reason why on the depreciation side I say estimated is because the tax software is going to be a little bit more precise on that part. That is just an estimate. That's how the spreadsheets work. You're going to be able to download the spreadsheet. It's on the description. Just download it. You're going to get this exact same version. I'm going to save this one, and so you're going to get this exact same thing that we have, and you can follow along. Now, big, huge caveat. This spreadsheet doesn't replace the advice of a CPA that looks at your specific tax situation. If you have an accountant, if you have a tax person, if you have a CPA, you want to follow his or her advice first and ignore my advice. If you don't have one at all and you use your own tax software, or you're using this as a setup to help you organize yourself, so then you can ask that person for advice, I'll welcome for you to do so. I would recommend that you send them a copy of this video so they contextually know what the spreadsheet is instead of thinking that you just made this up, just because many accountants get protective about business owners making their own weird calculations for home offices. And actually, if you watch this video and follow along the logic, then it would make sense. So that's a really important piece. The other really important thing that I want to bring out is if you're going to use depreciation, and you don't always have to use depreciation, but if you own a home and you elect to use depreciation, which is all these numbers up here about the value of the home and all that stuff, you are going to take a deduction on the depreciation, but you're going to reduce the value of your house or reduce that basis. If or when you sell that home eventually and you sell that home at a gain, you're going to pay back a tax for recapturing those expenses that you took. So that's a really important concept, because most Americans, when they sell their homes, because of the exceptions, even if they sell at a gain up to $250,000 per person, $500,000 if you're married filing jointly, that's all exempted from tax. So when you start depreciating your home for the purposes of home office deduction, that portion that you've been depreciating, you will pay back a tax equivalent of that gain if or when you sell that home. So that's a really important point, and for that reason, many people just don't depreciate the home. They take all the other expenses or related expenses and don't depreciate the home, and I would understand that sentiment overall. Anyway, again, go in the description below if you want to get a copy of the spreadsheet. There's my email below. I tend to answer quick email questions, but if you're not my client, I can't sit there and analyze your entire situation for free, because this is what happens when I do tax videos, is people will send me the entire story of their life and expect a free tax analysis, and we just can't do that. I think the spreadsheet enough should be valuable enough for you to get you started. Talk to your accountant or CPA, do it with TurboTax or your own software. And if you need to hire an accountant, you need to hire a professional, there's my contact information, and I'll gladly help you if I'm available to help you at the time that you contact me. Anyway, I hope you enjoyed this video. Make sure you hit like, subscribe to the channel, go into the comment section and tell me what other type of videos specifically like this, tax related spreadsheets, that sort of thing, you would like to see, because I'm going to be creating more and more tax related videos in the future. Thank you, and I'll see you on the next one.